What is going on, guys? I'm going to start here in the next 2 to 3 minutes. I know there's a couple people who want to jump on. So nevertheless, if you have anybody that you want to invite to this webinar, contrary to the one we had before, the one that I had last week was very, very in-depth. I believe it was a 2-hour webinar that I went over with a lot of you. And we went over a lot of information. It was basically Forex 101. So if you were, completely new to intermediate, it was a good recap and it got really good to understand what we're looking for. On this webinar, as you can see, we're going over 3 main topics and then going over some questions that I asked some of you on the Telegram group, and you guys posted your questions, so I'm going to go over that as well. And then as you can see, we're also going to be going over this previous week's market, how it behaved. There's some really good calls. Again, most of the calls that has been happening have been on point. So nevertheless, I'm going to give it 2 more minutes and then I'm going to get started. If you have anybody that you want to invite, a friend, family member, someone who's been looking into trading, someone who is intermediate or something, this is a little bit more, I'm going to say beginner advanced to intermediate. When I say beginner advanced, I mean, I'm not going over the basics. I'm not going to go over what is Forex. I'm not going over, why trade Forex. I'm going to go over into technicals, how to trade, and then also the subjects that you see. So I'm going to give it 2 minutes and then we'll get started. Perfect. All right, so I'm going to get started. First of all, I want to thank everyone who decided and made time to jump on the call. I know it's a Saturday evening. Some of you are on a different, time all over the world. So first thing I want to, address is some ground rules before I get into anything. Number one, pay attention. Obviously, more than anything, this is this is for you. This is not for me. I have a passion for what I do, so I'm taking the time out of my day and really take the knowledge that I have and pouring it into you guys. Understand, if you're in this webinar, you know more than anybody else. There's people who charge you hundreds of dollars, if not thousands, to show you this information. So obviously what I'm doing is something that most will not do unless there's something that you give them, something that they're looking for, if that makes any sense. So all I ask for is, for you guys to be very interactive. Whatever kind of energy that you guys portray, I will pretty much give that same energy back. If you guys are dead, not asking any questions, just not even there, then, what's the point of having it? Because this is for you. So anything that you feel you have a question on, please go ahead and ask. The way that I learned it is either ask a question, get your questions, your concerns addressed, or remain a fool forever. And, other than that, for those of you that don't know me, my name is Brian Rivero. I started trading almost 2 years ago, but I've been trading long enough to know what I'm doing. The only difference between me and you is the size of my dream and time. Really, I was hungry to learn as much as possible, and I took every single hour of the day, month, week, year to learn more than you. That's the only difference. I'm not smarter than you. I'm not brighter. I was just, and I still am, more hungrier than you. And this is not competition. I'm not bragging or boasting. I'm just letting you know, if you truly have that desire, you can truly learn how to trade. I was able to become, self-sufficient, self-dependent with Forex this year, March the 30th. I was able to completely leave all of my 9-to-5s. So I know it's possible to actually come in here, learn the skill set, create some goals for yourself, stay consistent, and truly become that self-dependent Forex trader, along with whatever you want and have to do. So, with all that being said, the other thing that I do want to emphasize is, since I'm doing this out of heart, I'm doing this out of my time, I'm not asking you to pay me. If I am asking for anything, it's not really money, it's not really anything. I'm asking for some publicity. If you guys have an Instagram, you can tag me into your stories. If you guys do stories, posts, whatever the case may be, add me to your story, tag me in it. I'll put you in my story. That gives you also some, publicity as well. I get people who click on profiles all the time. So it's a win-win situation. But for me, it would mean a lot if you can, throughout the webinar, post me on there as well, because it not only helps me, but it also benefits, for more traders like us to contribute, come in here and be part of the family. But with all that being said, before I get into it, there's a very important question I want to ask every single one of you. Number one is, did you guys trade at all this last week, whether it was demo or live? Did you trade either once, 10 times, whatever the case may be? Type in a yes or a no. And remember, this is an interactive group call. There's 15 people on this call. So I should get 15 yeses or 15 nos. All right, so Lexi said yes, Larry said yes, Angel said yes, Jay said yes, Alexander said yes, MJ yes, Zed, Alejandro, Adam, he said embarrassed enough, no. No embarrassments here. Valeria said no. I know Valeria has a busy schedule. I think she has one of the busiest schedules I've ever heard. Brock says yes, lots, perfect. So one thing I do want to really quick, for the people that are on the call, I want to give a special shout out, not only to everyone, of course, but number one is Jay. For those of you who do not know who he is, Jay has only been trading for about 3 weeks. He got involved with this company not long ago, and he left the company, whatever the case may be, nothing too crazy, but he's been trading for 3 weeks. And correct me if I'm wrong, Jay, but you took a $30 account to over $100 this past week. If I'm not mistaken, I know you posted it on the Telegram, and coming from a person who's completely new to the industry, you're killing it. A $30 account into now 120. to add to it, almost $100 in profit in a single week. And $100 to some, you know, may not be a lot, but understand that's $30. You know, most people don't do that. I am playing with the $30 account I started. I'm not going to show my profits until I get that to 3,000. That is the goal. However long it takes me, it has to happen. I need to show people this is possible. MJ, big congratulations to you. I know that you've been at this game for some time, and I think you just had that click this last week, and he said he was up like 66 pips, and the consistency has been all there as well. Another shout out to Alejandro. I met Alejandro, almost a year ago, and, you know, I started working with him in Forex, and he showed me a picture. It was like $100 deposit or something, and he profited over $300. So his account was at $400. And I know it's not too personal because we obviously, you know, want to brag and boast about our profits, but I think it's amazing. Who else? See who we got here. Zed is a student to the game. I think Zed is one of the most consistent students that I've met. Obviously not saying that you guys are in here or not. I'm just saying he lives in Jordan. So for him right now, it's like 4 a.m. And for some of us, it's only the evening time. So it shows you how, you know, hungry he is. You know, and that means a lot. 100% means a lot. Who else do we have in this call? Alexander, good to have you on the call. Brandon. You're going to have to forgive me. I don't think I know who you are, but nevertheless, good to have you on the call. You know, we have Brox, met you on Instagram as well. My boy has been killing it. Angel's been consistent. He told me that he recently had that click not long ago, and he's been trading a little bit more consistent as well. Alejandro said, want to see results, put in the work. Exactly, put in the work. You know, chart time, go in there. And these webinars are really it, to be honest. Valeria, again, shout out to you. You're killing out there. You're one of the most busiest persons I've ever met in my life after me, before I even, you know, became self-dependent in the market and whatnot. But another question I want to ask you guys, from 1 to 10, how consistent are you in Forex? Whether it be trading, marking up, analysis, learning, whatever it is, how consistent are you from 1 to 10? 1 being not consistent at all, 10 being consistent AF. Angel said 10, Brock said 6, Larry said 8, Kashan said 3. Kashan, if you guys don't know who he is, he's pretty good at what he does. The only thing that's keeping him back is his 9 to 5, and he's still, sometimes he runs off with 2-3 hours of sleep, which is amazing, which is a blessed problem, if you say. Adam said 7. Alejandro said 8. So okay, we have an average. Lexi said 9. I think Lexi, you're like almost 10. I can see why you said 9 though, because you missed our one-on-one yesterday. So good job. Larry said it's destiny, 100%. Said yeah, I give you that 1,000, 10,000 over the limit for sure. But with that being said, I'm going to mute. If you guys can mute your mics, that'd be great. But I'm going to go ahead and mute. Nothing against you. Just want to say, of course, you know, respectful to everybody on the call. My 2 jobs in university are killing me. I completely understand you. And a little thing that I can tell anybody on this call is if you feel like you don't have enough time, real quick, just let me share my story with you. When I started trading, I had 3 jobs. And I love sharing this story because I'm nothing special. If I can do it, honestly, anybody can do it. I was a professional window cleaner. I have no idea how professional you can get when you clean windows, but it sounds better than saying I clean windows for a living. I was a professional window cleaner. I was really good at it. It was money. And I was also doing something called pedicab in downtown San Diego. That's where you have a bicycle and you're taking people on cruises and pretty much transportation. But the way that I explained it was I got paid to work out and take people to different places in downtown. You know, always got to look at the positive side. And then I was designing, you know, learning to design websites on the side. I never got good at it, but what I really got good at, it was production, editing videos. I still have a passion for that. With that being said, like I'm going to design some videos for you guys in the future, kind of lifestyle and kind of going over, you know, trading and whatnot. But when I started trading, I started like 3 months into it, got my biggest withdrawal ever, and was really from there creating a goal and leaving this job first. So I left my first job around November, and then my second job around February, and then finally left my last job in March. But at that time in March, I was already a full-time pool technician, meaning I would go to pools and fix their, you know, anything that had to do with equipment. Sometimes I would service the pool. But that's how it started. And when I had all 3 jobs, the only time that I truly had, and this is being real, is the time that I had from my, you know, home to my job. So here in San Diego, we have something called transportation with buses and trolley, and I would use that time. So it would take me about 45 minutes to get to my job. So I would take those 45 minutes, plug in my earphones. You know, the difference between everybody, the scenario that I always love giving is, you know, in that movie, which the 8 Mile with Eminem, you know, when he's in the bus, takes out his CD player, puts on his headphones, takes out his paper, his pen, starts playing the music, and then he starts writing on it. If you haven't seen the movie, I'm pretty sure you have, but if you haven't, 8 Mile by Eminem, it's a great movie. That was me, but with Forex. So I wasn't just, you know, spinning rhymes and catching vibes. I was learning how to catch pips, not feelings. And that was me, 45 minutes there and 45 minutes back, a total of an hour and a half a day. So if I was able to do it, I guarantee you, you can do it. So with all that being said, I'm going to get right into it. One thing that I do want to say is this whole time, if you guys have any questions about anything, please let me know. That way I can go ahead and explain it. So first of all, I think my screen should be shared. All right, perfect. Resume. So number 1 topics we're going to go over is recap of our last webinar. Just kind of go over real quick, nothing crazy. You know, we're going to go over Fibonacci's. I think that's a big one to really learn the retracements, to learn exactly what we're doing, when to get in, when to get out. And then also psychology. I asked you guys, what would you want me to go over? Some of you said psychology for entering a trade. Some of you said Fibs. Someone said entry points and exit points. And then also, I didn't put it in here, but I'm going to go over also, someone said trend reversals, which is basically a market structure reversal or market change. So let me put that in there. Someone said trend. If you want to write this down, so you know what we're going over. Which is also pretty much structure. And then from there, also what I'm going to go over is last week's market recap and then next week's projections. So because I called some trades out that were pretty good. So with all that being said, let me go right into it. Let me see. All right, if you guys have this, this should be in your notes, just so you know. If not, that's okay. All right, so Euro USD, doesn't matter, GBP USD. Right now, I'm looking at GBP USD. First thing is first, let's look at the daily chart so we know exactly where the market is at. As you know, if you were trading, we saw this big push to the upside. And just so you know how many pips, or you can say potential, this move was from the time that it actually found support to the point where it found resistance. That was about 325, 330 pips. I'm gonna let that sink in for a little bit. Meaning in a single day, day and a half, it moved 300 plus pips. That's crazy. So it moved half of this move, this downward move right here, half of it happened in a single day. I think this move took like, 14 days or something. Let me see. 18 days. This move happened in 18 days. So it took this took 18 days, and then this move to the upside took about a day and a half. So real quick, number 1, recap from last week. I went over basics, the who, what, where, why, when, the essentials of what you need. Psychology aspect of the whole trading platform of what to trade, why you're trading, the mindset with it. And then also I went into the basics technicals, which was support resistance, trend lines, supply and demand zones, and market structure, aka trend, really outlining where trend is going and whatnot. So does anybody have any questions on that? I'm not going to go over in depth, just any questions like, hey, I saw you went over this. I tried to look for it, I didn't find it, or so and so. Yes or no? Give me a yes or no so I know that everybody's on the same page. Okay, Jay said supply and demand zones real quick. Perfect. So supply demand zone, the difference between a supply and demand zone and support resistance is that support resistance sometimes it's more of an area of either rejection or bounce. And also, some people say it's the zone. Personally saying, of course, everybody has their way of trading. What I truly found is support resistance is more of a price. Price zone, there's a difference in zone. When I say price zone, it could be like last week, for instance, let's go to your USD. I called this out. It was a beautiful setup. If you guys don't remember or if you don't know what I'm talking about, it was in the Telegram. It was support at, this was what we went over last week, the highs and lows market structure, as you can see. But last week, we say, let's get a cleaner chart here. Last week, we went over how your USD was going to find support at 1.1300 to 1.1305. And if a wick 1302, to be exact, it wicked 1.1302. And it found structure, meaning it didn't pass 1311. So it was an almost to the point, to the dot of where we found. So that was something that you can truly say support. But when it comes to supply and demand, a supply and demand zone is the zone. And if you think of a business, in any business, you have your demand, which is whenever, there's a demand for a certain product, what happens to the price? It goes up. Whenever there's supply, price will go down. So if there's like people buying a whole bunch of this product, little by little, not only is it smart to raise prices because there's a lot of people wanting to buy it, but also it's going to limit how much product you have. So what they're going to do is they're going to rise, or they're going to actually, in this case would be they're going to raise the price. So in Forex, it's the same scenario, meaning if we have a demand zone in the bottom, we're looking for price to go up, where supply zone, we're looking for price to go down. And I can find you a perfect example. When I was trading over here, I can find so many scenarios right here. But your USD has been something I've been trading for a long time. So I know exactly where these supply and demand zones are. And most of the time, these supply and demand zones are really rejections that happen periodically. I'm going to go through it as well. So a couple supply zones happened. One sec. Where is it at? Right here. So when I was over here, I was speaking about how I was trading this market. But let's say, most of the time you'll have wicks, of course. But when you have a point where it rejected, you can have that point be a resistance. But what I like is to draw zones. So right here, you see how we have all these wicks. What I'll do is I draw it from the top of the wick to the body of that wick, and I'll draw it across. So when we draw this across, right there, you can see how price fluctuated in this area. And I see that we had Eric just join. Eric, if you can hear me, welcome to the call. I know this is gonna be a little bit more advanced to you, but I'll still take notes on it. Eric is just joined our team here with Impact Forex / what we're doing with artificial intelligence. I want to be teaching him the basics of everything. And that's another pet peeve, another positive if you actually join the team, is you have full access to me 24/7, contrary to anybody else that doesn't have, that benefit. You only have Trading Factory, which is still a blessing, but the difference is that I show you more in depth, and I actually show you the advanced strategies. So here we have what we call supply zone. As you can see, like there's no definite point, right? There's no definite zone. Price zone. Price, take that back, where price rejected, it was more like a zone. We have this high, this lower high, this lower high. We have this wick. We have this other wick that kind of passes previous high. So it's a zone. And then once price, breaks through, then we're looking, okay, is it going to be a demand zone? And you can do this, but I don't necessarily like doing that so much, even though, of course, you could come in here and say, oh, it did reject. You just never know. for instance, like how are you able to tell that price is gonna break through like it did right there? So that's why a supply and demand zone, I don't necessarily, leave it. You can, but when price goes through it, I don't really leave it. I'm looking out for potential uptrend, potential structure, which we do have here. We have a trend line. Another, let me go ahead and erase this so you don't get confused. And of course, we do have another supply zone in this area. If you mark this the correct way, demand zone. I'll take it back, my bad. This is a demand zone. This is on the 1 hour, by the way. So this did happen, within a day, 2-3 days. But still, it was good to know once this wicked off and came back, you could have drawn your zone, at least to know what this is. Knowing that market already broke that supply zone, we're looking for that uptrend with everything else confluence, meaning the uptrend with technical analysis, support resistance, trend line. We have another zone up here. Boom. From this wick to the body of the bearish, you can see there was a zone that projected the price was going to go down. That was the other reason why I was able to take this trade, as I went over with you guys. This wick right here before it actually moved. This was FOMC, so news made this move, and that's a fake out. Oh, that's another thing I'm going to go over today is fake outs. That's going to help you a ton. So a lot of good things, a lot of good topics, but does that answer your question on supply and demand zone? It's basically a zone of where price rejects or bounces back from. That's essentially what it is. All right, let's see. Perfect. So first thing is first, let's go over Fibonacci's. I think Fibonacci's is a big one. Then we can go over the rest. Fibonacci's, number one, what are Fibonacci's used for? They're pretty much, if you go to the tool on TradingView, for those of you who don't know what I'm using, TradingView is a platform that I use to trade in. Yes, Fakeout is a big one. I think Fakeout is one of the most important ones, if anything, to be honest, in my, my opinion. So, another one that I want to go over is time correlation. This is a big one, but let me go over Fibonacci's first. So Fibonacci's, when you go on your tool on the left, you can find it on the third column, and you go down. It says Fibb Retracement. So what is it used for? Pretty much what it's telling you, a retracement, aka pullback. And how you use these is first you have to understand structure. So structure we went over last time is you have to understand, is the market an uptrend or downtrend? So here we can see that this market was in a visible downtrend because we have a high, a low, a lower high, lower lows, lower highs, and so on and so forth. So how you draw this is in a downtrend, you draw it from a high to a low. And I'm going to show you why I decided to draw it here instead of, my bad, right here instead of the other location, and why I drew it where exactly I drew it. Let me check. Someone had a question. So think of it as confluence. So it helps you identify where market may end up going. Support resistance, again, it's helpful, but a supply and demand zone indicate price is ready to move from that area, meaning there's not a definite, price is going to reject, but it's a zone that is going to play with, and it's more confluence. Confluence trading means that you have different points like, oh, we have a support line, we have a supply line, we have a trend line, we have a Fibonacci level that is touching. So it's just basically putting it all together. Like, think of supply and demand zone, another tool that helps you in the market, if that makes any sense. I need to start putting in those trend lines. Yes, of course. And Alejandro, I know you're doing market maker method. It's beautiful. I know that you probably understand it now, but once you, put in technical analysis, it helps you a ton. So Fibonacci's, let me go ahead and draw where I drew my points. Point A was from this wick, this bearish wick, to where it found support, which is right here. Okay. So notice that I drew it from here, meaning from this point, from this high, that's when we had to move. You're probably asking, why didn't I place it there? Well, let me explain something about Fibonacci's. If I were to place it there where it found support, and I'm going to draw it in a downward trend in a selling market, I'm going to draw it bearish to bearish, wick to wick, as you see right there. I know I drew it over here, but pay attention. 23.6%, if the market retraces to 23.6%, that is continuation. Write that down. For Fibonacci's, 23% is continuation, okay? Meaning it's not a visible or a valid retracement or pullback. That means market is trending a lot. And as you can see here, it did. So we're gonna find the next point of support, and I drew it right to that wick, that bearish wick. And you're like, why did you draw it over here? Because from there it found support, plus price never really crossed that area again. It just found support. And then from there, we're looking at where is it going to reject? Where is it going to pull back to? And this is where confluence trading comes in, because if you have your support and resistance lines, you know what you're looking for. For instance, this green line right here is my 4-hour support and resistance line. And I do this on the line graph, also on the candlesticks, but you can see here, it's aligned directly with 38.2. 38.2. At this point, notice I don't have a trend line going on. I know you see one right there, but at this point, I did not have one, okay? I did not have a trend line, so I was just looking at the market. I knew market has been in a big downward move. I know we had this little push up, and then we can see market broke structure. Again, if you were on the previous call, this is going to make a lot of sense. If not, it's okay. DM me, and I can go over this with you. So, boom. Having this in there, we know that the market created a low over here, and once market crossed this area, it broke structure, okay? It broke structure, so the Fibonacci's, you're drawing it from a high to a low. Once you have this in place, you can counter trend. Don't get me wrong. You can counter trend, meaning if it's a bearish market, you know, don't buy, and if it's a bullish market, do not sell. Once you get good at actually finding the trends, then you can do counter trend. And I'm going to explain the reason why after this, because some people were calling out trades last week on GU and EU, and I was like, why? Of course, NFP was a different scenario. Adam, let me go through it, then that should answer your question. So, number one, don't counter trend. We're looking for a point where it finds resistance. And all these points, 38.2, 50, 61.8, 78.6, 88.6, they're all price, you can say price reversal zones or price reversal percentages. So the first point that I always look at is 38.2. 38.2 is a strong indicator, a first point where market is my reverse, okay? And as you can see, it did. It not only did it find resistance on my 4-hour support resistance, but it never crossed 38.2. That's called confluence trading. So we know that market has to pull back, and it did, and it found it at 38.2. So now what do? Once market moves to the low, now we move our Fibonacci's. So what I'm going to do is I'm going to take my Fibonacci and go to that point that it found a high. Again, notice how I'm drawing it to the bearish to bearish, okay? I'm not doing bullish, because if you're drawing it from a bullish candle, when you're in a bearish market, when you're in a downward move, like you're putting it at a point of resistance that's not valid or confirmed, meaning that once you drop from the bearish to bearish, this is a downward move. This is confirmed resistance and a confirmed support, a high and a low. Plus, look at this wick. This wick, like, how do you explain that, right? It's probably more, has to do more with news. So this huge wick probably stopped you out if you would have sold. If you would have sold. So there's things that I'm going to go into on the entry. So we draw it from this bearish candle, try to get it to the wick, to this bearish candle wick support. And notice how this market wicked 61.8. Let me zoom in so you can see. Notice how this right there. So the market wicked, price went all the way to 61.8, but something critical is it never actually crossed, meaning it never tested over, this is on the 4-hour, by the way, on the 38.2. Okay, that's huge. That means it found resistance at 38.2. Now I'll explain that a little bit later. You'll understand this. It wicked 61.8, but it found resistance at 38.2. Okay, and then of course, okay, cool. Another example, is draw it from this new developed high to now the recent low. Boom. And I'm going to draw it right here on this one. So I know you're saying the reason, I mean, it's to the dot. It's almost identical. Look at these questions. How do we change candle colors on TV? On TV, I don't know, but I can show you how to change them on your trading view. Kelly said, that's the one that got me. That's funny. It's also a fake out. So I'm going to go over fake outs. Trust me, I got you guys. I'm going to go over some stuff that's going to change your trading game a lot. Yeah, I got you. I'll go over that. Let me go over this first. So bearish to bearish, I mean, I drew this resistance line because on the 4 hour, we have this point that, you know, acted as support. It wicked this price two times, and I drew it over. And that was what we call confluence trading. So it came up and it wicked. Notice it wicked this resistance, almost wicking 50%. We can actually move this a little bit to make it a little bit more accurate. It wicked 50%, but where did it find structure? 38.2. Remember, if it doesn't test above a price, or in this case, a Fibonacci price, that means it didn't actually, you know, break it. Let me show you an example. So let's say you guys see this red support and resistance line right here. If price comes up like this, we have a candlestick that goes directly up. But right after that candlestick, you have another candlestick that comes back down. That means it never actually broke this. That means it's still respecting that price. But if price were to break through like such, and then probably come back and either test above, which most of the time is testing that zone, then it's a valid breakthrough. Then we're looking for this price to go up. Okay? That's what I mean. So this is a valid break, and I know that probably doesn't make sense without candles, but you get the point if market does that. So 38.2 is always the one I'm looking at. And I'll break this down into entries in that, but that's one way of using Fibonacci's. As you can see, I have one already in place for this uptrend, a bullish engulfing. Where? Are you talking about right here? Yes, that is a very exaggerated form of the bullish. And no, actually, no, it's not a bullish engulfing. I take that back. You mean bearish engulfing. Very exaggerated point of a bearish engulfing. Bullish engulfing would be on an uptrend. So you can see right here, I have my Fibonacci set. Remember, uptrend, bullish wick to bullish wick. Precision is everything. So let me put it there. Boom. And of course, I have my weekly support resistance. When did you draw the downtrend line? And one sec, let me get to that. So here we can see I drew this, and notice how I do have my weekly support and resistance. When I was on this market with Aaron last week on a one-on-one, I told him the market was going to do exactly what it's doing right now, except we're first looking at 23.6, which it did break. So then we're looking for the next point, which is 38.2. Which it did break, and notice how it closed above or below 38.2. So now the next point we're looking at is 50%, and we do have a 4-hour support line right there, and it hasn't crossed it, right? So that's a good indicator market may be ready to move, and we do have this trend. And someone asked me, where did I draw my trend? I drew, if you were on the last call, this makes a lot of sense, but if you're not, it may be a little confusing. But the reason I drew it here, because at one point I did have a trend line going, you know, through this area. So the trend line I had whenever I actually called this SAL on EURUSD right here, when it broke this triangle, was when I had this trend line going from here, because obviously at this point I had the weekly support resistance right there, and it never broke. Another confluence trading right here, not to get you too confused, from this high. This was a perfect setup. Most of you remember the setup. I went over this multiple times. So once it breaks through, So market found structure, one sec. All right, market found resistance, really, it tested right above 61.8. But if you go on the 1 hour, I believe it never actually tested over or whatnot, but you can see that it's still respecting though that weekly support resistance. So it's still in that 61.8 zone. You don't have to be to the dot. Of course, when you have this scenario, we're looking for that, okay, it worked all the way to 88.6, but it's still in this zone. Plus, we have a weekly support and resistance that I went over last week on the webinar as well. So when I drew this trend line was because I had, you know, obviously this high and it went all the way to the low. And the reason I drew my Fibonacci as well is because, look, it found, you know, resistance at weekly support, but also when the market actually came down and came back up, that's when I placed my entry. As you can see, entry is where the separation of the red and green are. Also because you're at the 50% area, close to that 38.2, and it was a perfect sell, but I had this trend line going on here, but the bigger trend line is from this point to this point. This I drew yesterday because I see that we have this wick to this wick. One sec. I'm gonna mute some of you so I don't hear my voice. So that's how I drew it. Again, to have a valid trend, you need 2 points of contact. So you have one right here, and then the third would confirm the trend. But obviously, another factor of this would be the highs and lows. In this case, for a downtrend, we have a high, a low, a lower high, a low, a lower high, a lower low, lower high, so on and so forth, until it actually broke structure. And I'm going to go recap on structure because this broke structure already. Of course, we're looking for this to now go up, and that's why I have this big red line right there. And of course, from there, we would have to look at DXY, which I'm going to go over today. But that's how you use Fibonacci. So Fibonacci's supply and demand zones, support resistance, and trend lines will make your trading a lot more sufficient. And that's why I was calling this whole trend out. I mean, for the past 3 weeks, I've been calling these moves out to the dots. And that's just because of what I'm showing you. So and what do you do think on short-term trades? Example, downtrend, but price has a short-term reversal. Would you recommend taking any lower time? Again, what I said is, unless you're good and perfect at not perfect, but if you're really good at catching these moves. So if you already look at the structure and say, okay, it's a downward trend, it's a bearish market. Me personally, if you are not good at taking these trades yet, I would not take these buying orders. Patience is virtue, right? Patience is your friend. And trust me, because I've been there. Once you get good at these moves, then you'll be able to counter trend. Until you catch these moves, until you're comfortable with catching these moves, then you'll come into the counter trends, because then from there, you're lethal. You're coming in the market and taking all sorts of trades, all sorts of movements. And there's certain things that I went through last week, like bearish engulfing and bullish engulfing, that give you, you know, that precise confirmation of, okay, time to get into the market. So that's how you draw Fibonacci's. Does anybody have any questions on Fibonacci's? And I'm going to draw some numbers that indicate the golden area that I'm looking at. So the golden, I call this the golden, I'm calling the golden fibs, actually golden fib numbers, and they are 38.2, 50, and 61.8. Write that down. I'll go over these questions. I'm good at taking those swings. Yes, swing moves, that's the other thing. Like if you take the swing moves and you want to catch a counter trend, if you're good at what you're doing at the swings, then go ahead and counter trend. You'll have a sell order and then you place a buy and you'll be like, what are you doing? Like, you know what you're doing, right? Where did you say you like to draw your fibs from? So from a, let me actually go to the right so I can show you more of a perfect illustration. So let's say we have a market structure like this. Create a low, high, low, high, Boom. So in an upward market, we're going to draw it from a low to a high and then spread it over. So the points are point A and point B. Let me draw that again. So point A and point B, and you're trying to find point C, which is the pullback, which is the retracement. And then in a downward move, like such, we're getting it from the high to the low. Oops. And you're trying to find your, so point A, point B, which is your low, and you're trying to find a projection. In this case, a perfect scenario would be a 38.2, but that's how I draw the fibs. What's the 50% for and 61% and 38 is confluence trading? What's the 50% for and 61.8 if 38.2 is confluence trading? No, don't go. So real quick, if I understood the question right. So real quick, confluence trading is basically a lot of factors coming into place for you to go into a trade, like support resistance. And say you're trying to sell and you find resistance line, you find a supply zone, you find a trend line, and then you put your Fibonacci's and it's like a 38.2 or a 61.8. That's confluence trading. 50%, 61%, 38%. That's just what we call price reversal zones or price reversals. That's pretty much what it is. And I can't tell you why there's a 38.2 and a 61.8. I will tell you this, though, not to get too philosophical, because I did do my homework a long time ago, is Fibonacci's are everywhere. Fibonacci's are life is constructed off of Fibonacci's. Circles, squares, triangles, patterns, everything is based on Fibonacci's. I saw something funny that they said that they found the Fibonacci sequence on Donald Trump's hair. You know, a little sense of humor there. But basically, these price reversals, that's really what it is. It's a pullback to indicate, you know, where we're going. So whenever I'm in a trade, the first price that I'm looking for, or the first reversal price, is always going to be 38.2. As soon as it breaks through, right, I'm looking now at 50%. And to be honest, I don't look at 50% too much because it's not that strong compared to like 61.8. Then, of course, you have your 78.6, 88.6. These are still points of resistance on a downward trend, but your golden ratio are going to be 38.2 to 61.8 along with 50%. 78.6 and 88.6, it just means the market has to, like there's more buyers in the market as that time. It's probably collecting more contracts before it makes the move down. And to be honest, whenever it retraces all the way up to like an 88.6 or 78.6, it's not going to be a fast moving trend from there. It's probably going to take a little bit more time, and I'm going to explain that. So usually put your fibs in when impulse moves are broken. Explain what do you mean by impulse moves are broken. I remember you saying bullish to bullish and vice versa. Yes, like I just explained. So right here on a downward trend, point A is a high and point B is a low. What do you mean though by fibs and when impulse moves are broken? I don't understand that. Is when motive moves are broken? Like it's so, explain that a little bit better so I can address your question and then answer it that way. Candles that move with trend. Let me explain it one more time. So a Fibonacci retracement is taking, the only time you use a fib is in a trending market. You can't use the Fibonacci tool right here. Like it's consolidating. Like you can't, it doesn't make sense because the Fibonacci tool is used for what is exactly telling you, a retracement, aka pullback, right? So here in a downward move, I'm taking it from a high on a bearish candle to a low on a bearish candle. Okay, and then from a now that we broke structure, I'm taking it from this low, which is a bullish low candle, to the bullish high candle stick. Does that make sense? Do you guys have any questions on fibs? Perfect. Does anybody have any questions on Fibs, on why we're using them and how they're used? Does that make sense? Actually, yeah. Does it make sense? Yes or no? Type in yes or no. I need to make sure you guys are on the same spot before we move to the next one. Yes, my bad. I was looking at Elliott waves earlier. That's where the terminology came from. I do not use personally. I mean, I know that exists and whatnot. I just stick to the basics. But I know what you mean. MJ said yes. Again, we have so many people on the call. I should get a lot more yeses and nos. Alexander said, understand how Fibs work now. Perfect. It's good to know. Jay said yes. Good. Destiny, perfect. All right, so next, let's talk about entry points. I think this is a huge one. So let's go on this market and look at some entry points that we could have taken, you know, really advantage of this whole time. And then I'll go into this closer one. So this is on the 4 hour, okay? 4 hour. So it's going to be more concrete than anything like 1 hour. The difference between a higher time frame is that you have more of a concrete information. So on a 4 hour, you know, you may have almost identical move on the 1 hour, but the 1 hour has more noise. So I do a lot of my technicals on the 4 hour, and then probably the 1 hour I'll look for entries along with 15-minute. But on the 4 hour, let's say we understand market already broke structure over here. Let's not even look at this information. Let's look at this high to this low. So this look at that info and see where we could have gone in the market. And I'm gonna explain different scenarios. So number one, we have this high, but we're gonna use our Fibonacci's through here. So we want to get into this market right here. We do have a resistance point. We do have this fake out. So let's highlight that area and see what happened on the 1 hour and see what we can see. Because if you would have been on the sell, you're on the right, you know, mindset, but you got faked out by that move. So if you don't see nothing on the 4 hour, you know, then break it down to the 1 hour. It just means more noise, more information. When I say noise, it doesn't mean it's bad. It just means more information you're looking at. So that's a stop hunt right away. I can tell you that's a stop hunt. And what does a stop hunt mean is like, have you ever had a trade where you place it and you had a stop loss, like, you know, 15 to 30 pips and you got stopped out? That's exactly what that is. So here, this is another variation of bearish engulfing. So as I told you guys before, bearish engulfing would be two almost identical candlesticks right next to each other. And I'm gonna draw this out so you know exactly what I'm talking about. Boom. This is a bearish engulfing. I know some of you, not all of you, were not on last week's call, so bear with me. That's a bearish engulfing, okay? This is another variation of it. So look at this, plan it in your mind. That's a variation. You do have one here on the 4 hour, right there, bearish engulfing. But of course, you know, we have to know when we want to go in. What I would do, remember, we went into the 1 hour to look at the entry. On the 1 hour, the entry for me would have been after it crossed this support line that was created right here. And I'm finding the medium of this. Notice how market came up, and we do have a resistance line right there. It's more on the 4 hour. It came up, found support right there, play with that resistance range, and then finally broke off. On the 1 hour, it broke, but on the 4 hour, what happened? It never broke. It just wicked it. So of course, you can come in after it broke it, but that's more like the 15-minute mark. On the 1 hour, I'm personally waiting until it breaks this support line, because now we're definitely confirmed that this move is going to happen. While if you go back to the 4 hour, you have this big, huge wick that happened as well, which is another indicator the market is definitely exhausted to go on the upward move. This market is ready to now reverse, right? This happened. So patience is a virtue. So if you're in a downward move, I'm not going to get in if there's a bullish candle still active. So this, I know this happened. You could have gone in there, but look, I'm not going to get in there. To be honest, on the 4 hour, on the 4 hour, again, it's different time frames. A better scenario would have probably been there. Of course, market came back up and then, you know, created a pullback, but still trust your analysis. You know where you're at. But if you want to get a better entry, that's when we break it down to like the 1 hour, more info. When you go to the 1 hour, the 4 hour entry was this big, you know, diagonal line, whereas the 1 hour entry was right here once they broke this support little line. And this is you looking at the market, right? Of course, we go to like the 30-minute. Now we have more info. This is why time frame correlation is very key, because I see some people that are on the 1 minute. Like I had someone the other day tell me, oh, I see a reversal on Euro USD when I was in a big downward trend. I'm like, what are you looking at? He shows me his market and it's like the 1 minute and 5 minute. And of course, you know, I didn't want to put him on the spot, but I was like, you know what? Let's get on the charts. Then they may show you something. It's going to elevate your trading a lot more. So on the 30-minute, if you come here, oops, didn't want to move that. All right, if you come on the 30-minute, you have more information you can play with. I personally like to enter. If I were to enter on any time frame, it's going to be the 1 hour and the 15-minute. You're probably asking why would I choose one or the other? It's just up to you. That's what you have to do a lot more trading to understand your form of trading. Like how do you trade personally? I'm not talking about any indicators. I would have some EMAs and you know, moving averages. I'm not going to talk about that here in this webinar. More confluence trading, but when you're looking at this on the 30-minute, you have to know what it's doing. Again, on the 1 hour, this is still a perfect entry. You're probably thinking, oh, I could have caught this move. I mean, don't be greedy. Take what you can, confirm it. That's what kills a lot of people, is like they don't confirm the trend. This was a 40 pip move that you would have missed on, excuse me, but I'd rather get a better entry or a solid entry than get stopped out, if that makes any sense. Of course, with time, you'll build not only the skill, but you're going to build the confidence to come in here and place a trade within this area, right? Let's go into another one. So on the 4 hour, entry point. Actually, let's go into why I entered the market over here, where I did. So on the 4 hour, we know that we had this weekly support and resistance happening right here. And we know that market respected our 61.8 retracement tool that happened in the zone. So why did I enter the market here? It was really, you know, in this zone after it broke, it was more of an entry. Because not only did, and I know you're seeing this like trend line, that's on the 1 hour / 15-minute. So don't pay too much attention. I did explain that on Telegram a little bit. You're only off by 2 pips on that trade, but did it stop you out though? Is that like, did you got stopped out or was it good? Either way, 2 pips, like that's crazy if you did get stopped out. That's an example of what I mean. So we go here, we know that the market is waking on the upside and it's following this trend line that we had that I created on the, stopped out. You got stopped out by 2 pips. Yeah, that would make me cry if it was a big lot on a standard, imagine. But anyways, so how did I identify this entry? Well, if we go on the 1 hour, we will get more information. Not only including the Fibonacci's that I had in place, well, along with everything else, but I did have this sort of like a little triangle. This is another pattern that I've learned that happens a lot in the market. But once this market broke through and created this retest, and I called this out too, you know, it broke through and look how it went to the downside. And then I said, wait for the retest. You had 2 opportunities to get into this market. Which ones? Not when it broke through, but when it retested. Right there. That was your retest number 1. And here's your retest number 2, testing the trend line. So you could have 2 orders in there confirming this trend. Not only that, but look how this market created like a push up and then right away created a push down. Another variation of a bearish engulf on the 1 hour. On the 1 hour too, on this other confirmation, you have these little these wicks that test the trend line, and then from there finally moved. But if we break this down to say the 15-minute, we get more information on that. And again, if you don't see, if you're not on the charts or awake at this time, you can have your, you know, your pending orders in place, or at least you can find that, you know, entry if it happened at that point. You can find these opportunities, you know, before you go to sleep, you know, after you wake up in the morning, and so on and so forth. Teacups, yes, I do teacups here and there. Not as much as a lot of people would, because teacups is really, for me right now, of course, would be another tool to have in my toolbox. But yes, I do teacups. Teacups are a good one. For those asking, I'll go into that sometime, some other time. But and then you also see, I know you guys are seeing this this little black line that I have right there. Again, I draw these lines on the 15-minute and 5-minute. It doesn't mean it's going to be respected 100%, but it helps me identify where it finds resistance and support on the 15-minute or 5-minute time frame correlation. When I'm in a trade, I don't stay on the 15-minute. I don't stay on the 1 hour. I don't stay on the daily. I go through every single chart to make sure that everything is aligned. You know, so you can see here, I drew this on the 15-minute because it found support and then finally broke through, not only through this this little inverted triangle, but it broke through and then came back, tested not only the trend line on the 15-minute, but tested this resistance, and then came back, and this whole zone on the 1 hour was where it tested again. In the 15-minute, it tested my resistance point and then finally broke through. Here on the other retest on the big 1 hour, we have a bearish variation form right there. So those are little, you know, things that you can use to your advantage. Another one real quick, and if I'm going too fast, let me know, because sometimes I get ahead of myself, and I know some people are not in the same pace, which is okay. It's cool. Okay, so I'm going to test a couple of you real quick, because I know not all of you would get this answer, because not all of you were on the previous call. But if you took notes, what pattern is this? What candlestick pattern is that? I'm going to wait until someone says it. Yes, but I'm looking for something more specific. You're close. Like, you're right, but there's something that I look for. And it's probably, yes. That's actually the perfect answer. Bullish engulfing. And you see the doji. Yes, variation. Yes, perfect. That's another perfect answer. Variation of bullish engulfing. I know some of you, I told you that a bullish or bearish engulfing would be when you have a bearish engulfing would mean you have a bullish candle and then right after it a bearish. And a bullish would be when you have a bearish and then right after a bullish. But then you have this. Some people call it a morning star. Some people call it a doji. I call it unnecessary candle. That's what I call it. An unnecessary candle meant to confuse you into the trade. So when this happens and you have this, you know, on the right side, you have a bullish candle like this. This is what you got to do. This doji, this morning star, whatever you want to call it, invalid. Not there. So now we're looking at these two. Why? Because this is there to confuse you. If you know how to trade it, then that makes sense, but just don't pay attention to it. Meaning on the 4 hour, even though I told you last time, I do have this line where I found support. This could have been a perfect entry right here on the 4 hour, okay? Let's say we're on the 1 hour. We're looking for that setup on the 1 hour. What would have been confirmed on the 1 hour? Well, what do we find? Okay, so number one, right away, we see this bullish variation. And I know that right after you had this bearish, but understand, we're already looking at that support. So we have this bullish variation. This was, again, market does things to confuse you. Now that this happened, I'm looking at this whole zone as support now on the 1 hour. Let me change colors. Boom. And then this line right here was for the 4 hour, right? The 4 hour entry. So we're organized. So this was 4 hour entry. So what would have been a good entry for you here after that bullish engulfing? Trust your analysis. You know what you're looking for. Boom, and you can place your stop loss under that support line that we're speaking of. How did I find that support? On the weekly. I'll go into that. So you found one there, boom, happened. And then of course on the 4 hour, that's why I would go back and forth between time frames to understand, because on the 4 hour we find another pattern that happened right here. So on the 1 hour we answered right there, on the 4 hour we answered right there. So let's go back to the 1 hour. Let's say this happened, right? Let's say you're in the market and you see this happening. Okay, cool. You answer, and then you have this. Patience is virtue. Unless it stops you out, you're still in the game. But once market is moving, you're like, all right, maybe I can get another entry or whatnot. And then so you're going back between the 30-minute, the daily, and then you go to the 4 hour, and then you see this pattern, and you're like, oh, that's a bullish engulfing variation. And then you answer. What just happened is the pattern. If you see a pattern on the 1 hour and the 4 hour, especially again on the daily, oh, multiple patterns on different time frames. Not only do you know it's a confirmed entry, a confirmed move, but you're also adding to your orders. So that is lethal. That's why sometimes I'll have like 4 or 5 more than most people do, because I can see that. So from there, obviously the market went up. What does it look like on the daily? This would take a whole day, of course, but on the daily, you wouldn't be able to catch that because on a single day, this thing just skyrocketed. That's a very bullish engulfing on the daily, and that's why I'm looking for this very bullish move. Not only that, because it broke structure as well. Yeah, not only that, because it also broke structure. So remember, structure. I'm gonna test a couple of you. What is structure? Or yeah, what does in your best form of explanation? What is structure? It's not that hard, but still, I need to make sure you guys know this. So someone gets it right, I won't go over it. I went over this last week for the people that were there. You're funny. How would you explain it? I'm going to explain it if no one gets it. Type in, I don't know, or structure is a current trend direction to, yes. Can someone elaborate on that? He said structure is a current trend direction. To break it means to change direction. Yes. Can someone elaborate a little bit more? He's on the right track though. When market breaks previous high and low and retraces to it. Yes. I need one more person to try and see. If not, I'll go in there. But you're on the right track, MJ. You're not wrong. I need someone else to add to it. Again, this don't know how to explain it past that. Okay. Thank you for letting me know. Anybody else? If you don't know, let me know. Because this is actually important. Structure is probably your best friend. If you know structure, you know a trend, you should not blow accounts, and you should not ever place a wrong trade. Valeria, you were not on the previous call, but that's okay. It's not consolidation. Right, and exact sentiments. I think that's where I lack on my definition. Okay, cool. I'll explain it. So, structure. So, an uptrend, right? Ignore the support and resistance lines on here. Act like they're not there. Or, matter of fact, so an uptrend, you have higher low, higher high, higher low, higher high, higher low, and then And then downtrend, you have a lower high and a lower low. That's structure. So real quick. So structure in a downward trend like this is when you have lower highs, lower lows points, and then for a bullish trend structure, you have a lot of higher highs and higher lows like this. Higher highs, higher lows. And when I say higher highs and higher lows, it's from the previous point. So like this high and this low is a point. This high is higher than the previous high, and this low is higher than the previous low, and so on and so forth. Now, one sec. So when is market broken? Yes, actually, yes, you're right. Which in fact will break a trend. So sometimes you'll have a trend line going on, which I'm going to go into USD and GU. So let's say, and this is not going to be perfect because obviously I drew it, you know, with my hand. I mean, just out of knowledge, but just bear with me. Act as if I'm a perfect artist. You know what? I'll be a perfect artist for a day. So you have a trend line going on. Of course, it will break a trend line, but structure, up bullish structure, bearish structure. Higher highs, higher lows. Bearish structure, you have, oops. And then bearish structure, you have lower low, lower highs, right? So when does it break structure? Well, first thing you want to look at is as soon as this market now only broke trend line, if you have a trend line in there, but sometimes you have a trend line that's crazy. What I'm looking at is it broke this low, right? You see how this market broke this low right here? I'm looking for that retest. So yeah, it did place this low, lower low, right? Which is confirming that market is reversing. But what confirms, really confirms this trend is that retest. And sometimes this retest will test this low as resistance. Okay? That's a textbook variation. Does that make sense? Yes or no? Destiny, if you're on the previous call, there's a reason. Again, real quick, I ask you guys questions to make sure you guys understand it. If you don't understand it, then I'll explain it. The reason I ask you guys questions was to make sure who understands it or who doesn't. And I did emphasize that I was going to explain it regardless. But Andrew said yes, Jay, Alexander, perfect. That means only 3 people understand it and the rest of you don't. Awesome. So, perfect. Again, it's not that I want people typing this. I want to know. Like if we were in a class, I would ask a question and someone's like, I don't understand it. Someone would let me know. Does that make sense? That's the reason I go ahead and do that. Again, this is not for me. This is for you at the end of the day. Another variation to this, you may have something like this. All right? Where market probably passed through that low, but notice that compared to this high, it created a lower low right here. So this is another variation to market being broken. And this, of course, I drew it up here because it's testing trend line. But even if it did not test trend line, let's say there is no trend line in place. It's still in structure terminology. Not only did it break the first point of structure, which was a low, but it never created a new high, right? Because I've seen this multiple times where from here it'll still be a bullish market. And how do you explain that? Well, sometimes it's a fake out. Sometimes there's probably some type of trend line that's going on and happening over here. You never know. But I'm just giving you a scenario. But the perfect, I guess, the textbook variation to this would be that it tests this previous low as now a high. that would be a textbook, I guess you can say. So this is, plant this in your mind so you see it all the time. That structure. Show a couple of variations. Yes, sir. Makes sense. I'm glad you cleared it up. Everyone has their blue step. Yes. Perfect. It looks like a triple top. Yeah. And then, of course, if it were to do something like that, you know, if it did something like over here, doesn't really matter. As long as it doesn't break this previous high, what do we have going on here? We have a head and shoulders pattern. Now, a head and shoulders pattern doesn't never have to be a perfect head and shoulders or shoulders to shoulder. Sometimes you have a higher shoulder and a lower right shoulder. Sometimes you have a shorter left shoulder than the right. As long as you have this, like you understand, okay, this is a head and shoulders pattern, right? Yes. So now with that being said, let's go into your USD and what it's doing right now. So this broke structure. The reason I asked you guys about the definition, even though I still explained it, was because I wanted to see who knows it, who doesn't. And a lot of you gave me some really good answers. Like MJ, who else? I think Valeria gave me a good answer too. Actually, no, Adam gave me the first answer, which was on point. I asked the question to make sure who knows it. So from here, the reason I have now the trend line is in place, potential trend line that was not only broken, but now probably being tested. So we know that there was a high over here. Notice how market, let's go to the 4 hour. This would make a little bit more, because again, 4 hour would give you more concrete information. Then we could go into like the 1 hour to look at more specificity. So what I would look at would be this right here. So notice how market broke. Not only did it not, you know, make a lower high, but it broke. Like let me take that back. So when market found support right here, we're definitely looking for that bullish trend. Not only did it not make a new lower high from this point, but it broke through the previous high. So now we see that it found support around over here at 50%. And of course it's 4 hour. So that's probably our new point where we can say that was a low. Not only that, but we're looking at, you know, thinking support resistance. We have this 4 hour and we have this trend line that it tested. So what are we looking for now? That's the reason I have this candle, this big, you know, big red arrow pointing up, because now the market has broken structure. Of course, we have to keep in mind the market right now can very much range within this area. It could do all sides of things. And that's what we're looking at, this weekly support resistance. Because before it was broken and tested and respected, but then it was broken once and then came back and broke it again, and it's testing again. So what I would want to see for the market to really confirm this buy is market test above this area, and we know that we're going on the upscale. So now market broke structure, okay? Not only did it break structure, but a perfect scenario would be if we had this market come back up and did its thing and tested this previous high as now a low or support, and then from there shoot up. Does that make sense? That would be a perfect scenario. Of course, we're looking for this move. That's what we're looking for. Even though market is below this weekly support resistance, first thing we want to know is it has to break this point. You can buy once it breaks this point. You can place another buy once it breaks this, comes back and tests this previous high. And of course, this is where you add on more. If you have a confirmed pattern, then you can put another buy over here. But that's where we look at candlesticks, you know, bullish engulfings, candlestick wicks, indicating the market is ready to reverse where it did right here, indicating the market is really reversing from there. Oops. Bam. Okay, so with all that being said, I think the only other thing I have to go over is fakeouts. This structure, some of you ask a trend reversal. That's exactly what it is. Excuse me, trend reversal. Okay, just so you know, trend reversal, market structure, aka the same thing. So now fakeouts, and then I'll kind of call it a day now because I didn't realize. Oh, an hour and a half. That's pretty good. Fakeouts. There's one fake out right there. And that's what we go into the lower time frame, which will explain, exactly what market is doing. If you don't know what's going on, go into the lower time frame. If you still don't know what's going on, go on the weekly and daily, see what market is at. Or are we bullish or bullish or bearish? Cool. Now we want to find structure. Now we want to go in there, do we find a trend line, support, resistance, and so on and so forth. So to be honest, you can say that this area right here was really a fake out, right? This was used to stop out a lot of people. So a lot of people that saw this variation, this bearish variation sold, and when market came back and found that resistance on the 4-hour, remember 4-hour, it's like some very concrete information. So this is a fake out. Fake outs tend to happen mostly, you don't see it too much, but this is where a little bit of market maker analysis comes in. So for instance, in this downward move right here, let's say we have our our support line. This is a perfect example, by the way. Support line right there. You know how we have this being tested, but for some reason this broke through? Remember what I told you? Unless the market breaks through and then the next candle breaks through but does not cross over or it tests below this, then it's a confirmed break. This was not a break. This is what we call a fake out, aka a trap move, aka a stop hunt. Valeria, market maker is what I'm going through right now. A little bit, not all of it, but a little bit. So from here, we see that market created this. Not only did it give you a bullish engulfing, but it never actually broke through. This is created because a lot of people, what tends to happen is a lot of people under this support line have a lot of pending orders. And they're going for a sell, right? A lot of people are breakout traders. So when you guys see this happening, a lot of people, oh, it broke through, did sell it. So that's why I go back and forth between time frames to understand what market is doing. Not only that, but if you would have, you're looking for that buy, and let's say you did get stopped out. Okay, let's say you did. What happened right after? You got a bullish engulfing candle pattern right there. So then that would have been a perfect either re-entry or a perfect time to enter. That's a fake out. Why did it not find support, but it broke through yet again? It came back up. It does that to fake a lot of people out. Let's go into the 1 hour and see what it shows us. Should be able to erase this now. Insert that for notes. So now, again, that support line was on the 4 hour. So this, we find our support area, and then it was broken, right, on the 1 hour and never really tested. Again, a testing would be, let's say this blue line is our resistance. It broke through. I'm OCD. Whoa. That threw me off. But we can. No hard feelings. All right, cool. Thank you. A test would be where market comes back down and it tests right above it, like now testing at support, right? It never did that. It actually just came back over. But if you look at the 1 hour, what do you guys see now? What do we find on the 4 hour? A bullish engulfing. What do you find on the 1 hour? A bullish engulfing. Huh, funny. That's a fake out, but with every fake out, you're gonna get a pattern. Either bullish engulfing, bearish engulfing, or doji with whatnot. But most of the time, also you'll get a lot of wicks. So you'll have a lot of these kind of patterns. So say, you know, it's doing this thing right here. You have a lot of candles to say here. Doesn't matter if it's blue, bullish, or bearish. You have a lot of candles that will have this type of pattern. Long wicks, which in reality is what we call a hammer. Something like that. You have dojis. This is called a hammer because it looks like a hammer, like a original hammer that we created when we first. I'm not trying to get funny here, but anyways, that's a hammer. But yeah, that would be a variation of a fake out. You have this all the time. Is like you have your support resistance and it fakes you out. If it breaks through, look for that retest. This never retested. Not only did it not retest on the 4 hour, but on the 1 hour, it never retested. Yeah, it closed under it, but look, it came back and broke it again. Unless this bullish candle would have closed right under it and then the next one would have, boom, down. Okay, now it's confirmed it's broken. And then, of course, from there, we go on the 4 hour and see what we see. Does that make sense? That concept, you can see it everywhere. Okay, cool. What else? Cool, that's good. And I call these out too on Telegram. I remember trading a couple times with you guys, and I remember if you guys were trading with me, I think Kashan is aware of it as well. It's like, oh, we're looking for the sell, and look at what's going on. Like, oh, sell now, but for some reason, it didn't happen. So that's when we wait for confirmation. I said, this is a definition of a stop hunt. I remember calling that out. Like, this is definition of stop hunt. I believe it was this. Real quick, I went over everything I needed to go over. What are we looking for EU? And then I'm going to end it there in GU. EU and GU. And then let me know if you have any questions after that, okay? So EU, what we're looking for. GBP USD. The abbreviation is GU. G is for GBP, and then U is for USD. Oh, yes. Jay, let me address your question. So if you want to change colors on candlesticks, all you have to do on TradingView is right-click, Settings, and then go to Style. Style, and you can see candles. You can change. So the left one would be the bullish or whatever you want to call it, and then the right one from there, borders and whatnot. Another one that I would do for you guys is, so you can keep everything clean, is you can change your background. I have everything the same color because if you just open up TradingView, you have like a whole bunch of vertical and horizontal lines. I keep everything kind of gray. I change it from time to time to white. The reason I don't do white is because when you're on the charts, like as much as I am, your eyes will like pretty much get blood eye shot. They'll get red. And that's the reason I get rid of it. Notice that I do have something that I started noticing is that you see how I have Euro USD on the back and it says 240. 240 is 4 hour. I do have the watermark in there because it helps me just understand where I'm at. And then when I post pictures, it helps you understand, okay, what time frame is he on? You don't have to zoom in. You can just see the background. Like 60 means an hour. That's what that means. Everything is like in minutes. Then obviously time frames and whatnot. But yeah, that's how you change candle. On mobile, I can show you after this. Read what Kashan said. He said everyone in this business, is in this business to make money, not just us. Think of market makers like the dealers in poker. Exactly. And then, okay, so what are we looking for? Euro USD. I kind of went over it too. Euro USD. We're looking for the upside move. If it's confirmed, very, very much confirmed, it's still confirmed. I mean, we found big support, but we want to find that support. I mean, we found support here, but now we have a high. We're looking for that low confirmed. Being that it was Friday and then Sunday come Monday, we can have a gap sometime, some place in here. But our points of support, market can come from this area and find support at 61.8, and it's still respecting the trend line. Does that make sense? Like, it's still respecting it. So that's what we're looking for: candles, candle variation, candle patterns, wicks, tests, and so on and so forth. But this is what we're looking for ultimately, is this really bullish run after it breaks this weekly support, and in this case, weekly resistance. That's what we're looking for. But again, we broke structure. We had a big support. We created a high. We created a new low. We have to create another high. Come Sunday, we'll know exactly what happens, because come Sunday, we can have this market now going down and break back through the trend line. That can happen as well. That's why this has broken structure, but it hasn't been 100% confirmed. Does that make sense? So that's why you could have caught this trade if you're confident, if you know your skill. But for people like, you know, us and whatnot, some of you call NFP. This was beautiful, which happened. So that's what we're looking for EU. And I'm gonna go over this with you guys throughout the week, so you can make money with me. Catch this moolah. And again, I've been calling these trades, and most of them, and this GU is a perfect example. GU has not, I mean, GU was on a perfect, GBP USD was in a perfect downtrend, and this obviously broke structure. So what we're looking for now, and why do I have this red line right there? It's a support line. We have a support line right there, points, tested a couple times, range in that area, and it's tested. It's a perfect zone. Of course, I can go in there on the daily, 4-hour, weekly, and so on. And I do have my Fibonacci's. So Fibonacci's, I drew it on the 4-hour from bullish, you know, to bullish right there. So 23.6 again is a point of continuation, and it's market close over there. So we're not really looking too much. We're probably looking for more either a test right there before it goes up, and I mean test like the body of the candle will test right there. That means the body can close right there, but wick 38.2. But if not, it'll come and test 38.2. If it's broken, then we're probably looking for 50. But to be honest, from there, I would probably be more looking for 61. 50 it's just halfway point. It's not like a precise, you know, Fibonacci level, if you may say. So from there, I'll be looking at 61.8. But that's what we're looking at. Ultimately, the move from here, anywhere that the market finds support, is an uptrend. And yes, this big horizontal point, this horizontal line, is the weekly resistance. I know that on the 4-hour it broke this, but if we go on the weekly, it should be a weekly resistance. That's how I do my rules. So it's a weekly resistance. And you're asking, why did it place it there, not on the wicks or whatnot? It found resistance right there. What happened here? It never broke through, never tested above it. So it's still verified. All right. So that's why we have that. Oh, my bad. Completely wrong. I'm not looking at that. I'm looking over here. The reason I placed it here was because it found resistance right there. And if you go back in a little bit in time, you don't have to go too much because this is on the weekly. This area is tested a whole bunch, and then finally this was broken through, and then tested again, and then came back, wicked above it, but it found resistance at that point. That's why I have it there. That's my preference. Doesn't have to be yours, but that's what we're looking at for GU. So with all that being said, does anybody have any questions on anything you want me to look at, anything, any pair that you probably want help with? As you're doing that, let me go look at DXY. DXY, if you don't know what this is a good resource to have. This is what we call the dollar index. So it helps you determine where the dollar may be going, and it helps you trade. So I'm gonna explain this real quick. XRP, I'm gonna buy right now. I'm gonna buy. Perfect. Good for you. We had a head and shoulders pattern appearing over here, and when on DXY, so DXY, not to get you too confused, dollar index, if you're trading Euro USD, GBP USD, if the dollar is very bullish, that means the dollar is strong. I think this is important. Actually, take note on this, please, please, please. I know Zed, he found value in this. So this is what this means. If the dollar index is showing bullish, right? That means the dollar is strong. So in Euro USD, what that means is that the Euro USD is strong. If you're strong, you're heavy. If you're heavy, you're in this case, you're pushing the market down for this pair. Think of a scale. Think of a balance scale. If this is a balance scale, since this is strong, it's heavy, it's going to bring this market down. Does that make sense? If it's the other way around, the dollar index is showing bearish, that means the dollar is weak. So for Euro USD, that's what that means. So if the dollar index is showing bearish, that means the dollar is weak. Let me there's a typo in there, my bad. There you go. Boom. So this is gonna bug me. Sorry, I'm like a little bit OCD, so I need to make sure this is on point. There. So if the dollar index is showing bearish, that means the dollar is weak, right? If it's on a downtrend on your technical analysis, that means the dollar is weakening because it's going down. So the dollar would be weaker compared to the euro. The market in this case would be a bullish market for Euro USD. If the dollar index is showing bullish, that means the dollar is strong. For the pair Euro USD, since the dollar is strong on a scale, if you think of a balance scale, it will push this market down. It will push Euro USD down, making the trend bearish. Does that make sense? Yes or no? This is a good one. This helps me a ton. When I trade, it helps me a ton. Trust me. It verifies. It's like another confirmation, if you may. So does that make sense? What I just went through, okay, cool, DXY, perfect. Does that help though? Have you ever heard that before? If you have, I think this is good to know. You can do technicals on it as well. So what do we see for DXY right now is we're in a very bullish market. So Euro USD was bearish, which if you look at Euro USD, what was the market doing? It was very bearish in this move. If you look at what the market is doing now, and this goes for GBP USD as well, the market created a high, and the same technicals apply. It broke structure, so now we're looking for this to create a lower high, and you have so many points you can go through. For instance, not only did it break structure because it passed through the previous low, which it did right there, but now it's creating another point, a lower high. So since this is showing bearish, it's not confirmed, right? Listen to my words. It's not confirmed, but since it's showing bearish, that means we're looking for a bullish market on Euro USD and GBP USD. until those things are confirmed, we don't have enough information yet. And they're like, enough information. It's like, we need to confirm it first, because this market can very well find resistance point at this weekly and then range within this area. Whereas DXY, what do we have right now? At least we have this this previous resistance that is now testing as support, and look, it never broke through. So that's why we're looking at this now. These are gold nuggets. I swear, this was what took my trading to the next level. I know, helped me a lot. Alex Henderson, just another confirmation tool. No, not ever heard. Yeah, it is another confirmation tool. So if it confuses you, don't use it. Just get used to what I spoke today. It shouldn't confuse you though. If you do your technical analysis, don't like think, oh, the DXY is about to go and it's out, I'm going to buy your USD. It's not that. That's not what that means. Remember, if you're going to do something, make sure you have confirmations. Would that mean if you look at the opposite pair, it's opposite unless it consolidates? Opposite pair. What do you mean by opposite pair? Andrew said, yeah, started looking at it last week. Good. DXY reminds me of differential equations. Yeah. Krishan said, oh yeah, would you consider this week 1 or 2 of the MMM? I don't look at Euro index. I just look at the dollar, because remember, the dollar moves most of the market in Forex, like USD JPY and Euro USD. They're the most traded pairs in the whole market, and the majors in the market would be anything that has a USD dollar in it. So you can look at that, but then again, I don't really pay attention too much to that, because I know some people considered that last week a 5 from October. I know where you're coming from, Kishan. I will tell you, I'm not going to answer that question, because market maker can only give you so much. The only thing that I use for market maker now is the fake out, the double top, and that's really pretty much it, to be honest. Trust me, you'll get it more and more, but just I use technicals more than anything, but fake outs help me with market makers. So with all that being said, that is all I have for you guys today. Don't have nothing else. Telegram group, something for you guys to kind of take in consideration is if you have a chart you're looking at, you put it in there. Put it in there, and